Today we have with us Tushar Kansal, founder and CEO of Consultancy Ventures, a global venture capital platform. Tushar has advised and supported thousands of startups and SMEs across multiple countries.
Brand Capital, which was the investing arm of the Times of India group. I was a part of the team which invested 100 crores in 2008 and 9 across six companies. And people say that engineering is a great thing, but for all practical purposes, financial engineering can do wonders.
What is an example of financial engineering?
Once you get listed on a stock market, then your share value is in multiples of your financial performance of the company. And because it is in multiples, what you can earn from profit and loss, you can earn multiples on the balance sheet side, on the share side. Then what you do is, once your share price is great, then you keep those shares as collateral with a bank and take loan against shares. And once you have loan against shares, then you have access to really cheap money. You are not letting go of your ownership in the company, and you are getting access to 5 to 6% annual interest rate kind of money. And in the eyes of the government, you are indebted. You have a lot of debt, so you don't pay taxes.
Hi everyone, this is Vivek Srivastav. Welcome to my channel. Today we have with us Tushar Kansal, founder and CEO of Consultancy Ventures, a global venture capital platform involved in startup investing, capital markets, and institutional finance. With a background spanning Deloitte, brand capital, large IPOs, and venture capital, Tushar has advised and supported thousands of startups and SMEs across multiple countries. Today, through Consultancy Ventures, he helps founders and investors navigate venture capital, IPOs, debt, and long-term capital strategy while focusing on credibility, scale, and value creation. So that's amazing, Tushar. Thanks a lot for joining us. How are you doing?
Thank you, Vivek. So thank you for having me, Vivek. I'm doing great and looking forward to a great conversation.
So, Tushar, you've been in the finance, capital markets, all that sort of area. Were you always right from the beginning into the economics, finance side of things, or did it something else?
No, so I used to be an avid reader. So I used to read a lot, and whenever I saw people making news because of their money, so I always saw they belonged either to technology or to finance, and that's how when I did my engineering, then just I was my rank was 62, and on 61 computer closed. So, I had to take textile. So I missed by one, all those classmates of mine are CEOs in US right now. So but then I thought, okay, let me shift to finance. So after that, I did MBA finance from University of Delhi, and then that's how I became a finance guy. And subsequently, like working in Deloitte and Tush and brand capital, and all those corporate experience gave me a lot of exposure and set me firmly in finance.
Nice, nice, nice. So, how were the early days of your days in finance? Were you always on this kind of thing, the markets and startup and evaluations?
No, so actually, I had joined Deloitte in Tush. So I was the middle guy, like I was the consultant kind of person. So it really helped me understand how private equity works, how venture capital works, how due diligence works, how do you value companies, what are term sheets, how can you put clauses to make to secure yourself in a deal. And while doing all this, I understood that investing is a great thing. The whole global economic structure is made in such a way that investing will give you returns. The balance sheet will give you more returns as compared to profit and loss. So that is how, and then later on at Brand Capital, which was the investing arm of the Times of India group, I was a part of the team which invested 100 crores in 2008 and 9 across six companies. And that experience was truly valuable. And my whole, because I worked in Deloitte, which was a big four company, so it set me up in understanding the finer traits in finance and how you can use finance. The people say that that engineering is a great thing, but for all practical purposes, financial engineering can do wonders, which even normal engineering can't do. And I can explain to you how Elon Musk, how Jeff Bezos, they structure, they do financial engineering to be where they are. It's like that.
What is an example of financial engineering? Putting aside Musk and Bezos, but like just a simple example of financial engineering.
Okay, so you are a founder who doesn't have much knowledge about finance, and then you try and make all your money from profits. So you have no idea that the real value does not lie in profits. The real value lies in getting access to public money, retail money. So what you do is that you do some creativity in your financial statements, and you generate artificially high profits. So nowadays you see Zomato, Blinkit, and everybody using the term adjusted EBITDA, adjusted operating profit. So Paytm using adjusted. What is adjusted? It really means it is not what it is supposed to be. So but you use these terms, and once you get listed on a stock market, then your share value is in multiples of your financial performance of the company. And because it is in multiples, what you can earn from profit and loss, you can't earn. You can earn multiples on the balance sheet side, on the share side, and that's what you do is, once your share price is great, then you keep those shares as collateral with a bank and take loan against shares. And once you have loan against shares, then you have access to really cheap money. You are not letting go of your ownership in the company, and you are getting access to 5 to 6% annual interest rate kind of money. And in the eyes of the government, you are indebted. You have a lot of debt, so you don't pay taxes.
Oh, okay.
And that 5 to 6% money you use to kill competition. So all the companies in your sector, you bring down prices because you have access to cheap money and they don't have access to cheap money. So you bring down prices, kill those companies like China has done all over the world. And once the competition is killed, then you raise prices and make your cash flows. And all the time you are not paying taxes. And if you have 5 to 6 listed companies and one of them does not succeed, then you don't pay the loan back to the bank. The bank will liquidate whatever it can from the shares it has and take whatever money it has. The company will go into bankruptcy. So if the company is going into bankruptcy, it doesn't impact you. So essentially, you are living off public money, and at a humongous valuation by not taking any risk and not paying any taxes. That's how it works.
Interesting. Wow, I wasn't aware of all of that. Wow, wow, wow. Yeah. Were you involved in those kind of activities at these companies, Deloitte and so on, or did you?
We were even one step ahead. So we were playing cross border. So like if a money is coming into India, then it used to come through Mauritius, and Mauritius India had a double taxation avoidance agreement. But the finer point of that was that if a company from Mauritius was investing in India, then there was no capital gains tax.
Oh, really?
So because of that, Mauritius was even ahead of US and Singapore when it comes to FDI investments into India.
Right.
And the amount you save is amazing. Like today, Hutch from Hong Kong sold their telecom business to Vodafone of UK. The entire business used to reside in India, but the ownership of that was through shell companies based in Cyprus or Cayman Islands. And they essentially transferred the share certificate, one share certificate, a piece of paper, for $11 billion in Cayman Islands from Hutch to Vodafone. And they didn't pay any capital gains tax in India. The entire business was in India. So, so it's a global structure. And if you even look at Apple and, what these companies have been doing is, they have residency in Ireland, and they have a deal with the Irish government that there will be no taxes and they will generate all their cash flows in such a way that they ultimately end up in Ireland. And so the taxation is hardly anything. All they do in return of that is create some 100, 500,000 jobs in Ireland. So, all these things, this is financial engineering, right? So that's what makes it really beautiful.
Wow. So, how did you move on from all of that to, realizing that, hey, I'll start my own consultancy ventures and
Well, you can say that after, like, I was really fortunate. Like, I worked as a consultant, then I worked as an investor, then I was in treasury operations. So I learned treasury operations, then I was heading debt and corporate finance, and finally I was CFO. Then I was handling even auditing and accounting. So
wow.
I was very lucky, handle everything in finance in the corporates. So after that, that bug bit me that, I had already done entrepreneurship for 6 years before joining Deloitte. So, why not do it again? And that's how I lost a lot of my savings of my corporate life, because I was paying all wrong pricing to freelancers and to agencies, and lost a lot of money. By 2016, I had realized that since the best thing I knew was finance, and it was my bread and butter, so I should do something in finance. And out of all my stints in corporates, the best I found was investing. So I should be focusing on investing, and that is how I ended up opening Consultancy Ventures. And the luck was with me, because the Modi government had come out with Startup India, with almost 432 startups registered in 2016, and just few days back the government celebrated more than 200,000 startups in India registered with Startup India. So the journey has been parallel. The growth of the system and my company's growth has been in parallel.
Wonderful, wonderful. What you said earlier, I completely agree with that you got to stick with what you're good at, because even in spite of doing that, I, had so many challenges and problems and whatnot. So I can't even imagine what would have happened if I tried to do something in an area I knew very little about.
Right.
So, but I mean, did you see a gap somewhere? My startup, essentially what you did in the beginning was a startup yourself, right? The consultancy ventures. So, what did you see that was kind of a gap that you thought your thing would fill?
People had no idea what is a startup. And, like, in the West, you were talking about lean startup methodology, and you were talking about gurus, like, who really spoke so well, and, made people understand about how the startup journey can be quantified and meticulously narrated, and, in a disciplined way. Here, people had no idea, and exposure was not there. Like, nowadays there is Shark Tank, so people know so many things, like what is monetization, what is return on investment. But even today, I would say that although people might be knowing the buzzwords, but how to spot a pattern in an investment, the scale thinking, like how do you make it scalable, and why is this thing likely to go 10x or 100x, and the sense of purpose also. Like, people said, okay, somebody else is doing this, let me also do this, and those kind of things were there. And but nowadays things have changed in the last 10 years. Now you have a lot of good startups coming from IITs, from the incubators, and lot of good work happening as well.
But is there a gap, particularly in India, that is more so in India than other parts of the world?
Well, we are in a very unique situation that because our English language proficiency is very good. I mean, everybody broadly knows English, the educated people. So
Right.
that is why we tend to use the Western products. And because we are using the Western products, so our own created products always have to compete with US based products. And because there is 100 times more money available, more capital available in the US, so the amount of money which is available for India based startups is very less. While at the same time they are competing with US based products. So this inherent disadvantage is very acute. And what the Indian startups do to compete is competing on pricing. But because they are competing in pricing, they require more investor money, and they require more support, and their growth is also slow. So these are structural disadvantages which a company based having access to dollar funding is not there. And exits for investors has been a huge problem, so that is why the investors had been reluctant to invest in late stages. And even right now in deep tech startups of India, the late stage investing is a crucial concern. It is only recently that the SME IPO route was opened by the government, reinvigorated, and then a lot of investors were able to get an exit from the startups which had become big, like Zomato, Paytm, Policy Bazaar, and
So they were not being
uh,
able to exit. Why were they not being able to exit?
yeah,
I'm sorry, I'm kind of getting
there
confused
were
here.
very few large private equity venture capital players. Very few. Like,
No,
how many can you count? Like,
once they become IPO, then they don't need to do all that, right? Or
yeah, but because they had losses, so the code was, the SEBI code was that you should have profits in the preceding 3 years to be eligible to list on a stock
oh, so they
exchange.
were unable to IPO. Okay.
Yeah. And
Okay.
then they opened the route once all these guys were stuck in startups and they were telling the government, we are stuck. Like, there is no further investment, losses are still there, and so what do we do? So many of them started flipping to foreign
Right.
shores. Like, they set up holding companies in Singapore and
Right.
US and Dubai,
Flipkart did that,
and
I think.
many like PhonePe, Flipkart, Meesho.
I think they probably also got tax savings by doing that as well. Although if
Yeah,
they
because India, they
but
did,
but
because
if they're
India,
in a loss,
Singapore
I
had
guess
a
they don't have to worry about taxes if they're making losses, right?
no on capital gains. They have to worry because the share
Okay.
price moves up all the time.
Okay.
So like India, Singapore has a double taxation avoidance agreement.
Okay.
So, and the capital gains tax in Singapore is much less as compared to India. So they
Right.
used to have a holding company there, and since the shares exchange happened at that level, so that is why they saved on the capital gains.
But I'm still a little confused. Sorry, I'm an engineering guy. I don't know any of this very much. So, let's say I'm a company. I'm making a loss, right? So, where's the capital gain? I'm making losses. There's no gain, right?
No, the capital gain is on the sale or transfer of shares of the company.
Oh, okay, sure.
And even if your losses are increasing, but since your business is
The
increasing, your revenue is
evaluation,
increasing,
the
so the
valuation went up.
value goes up.
Right, right, right,
Yeah.
right. Okay, and so you're talking about the share exchange on between the company and an investor, or the founder
Yeah,
and
between two
someone,
investors, and
whoever. Yeah.
but mostly between a company and an investor, because the company issues fresh shares and then the investor money comes in.
But then those
And the
guys, once if they are Indian citizens, then they'll have to pay the personal income tax. So
I think in double taxation avoidance, it is like where you are based for more than 6 months of the year.
okay, right. So he could go live in Dubai or something for
Yeah.
6 months and then yeah.
Yeah.
Okay. Well, hopefully one day I'll reach that stage where I have to worry about these things. Right now it's more about more basic stuff. Could you tell me about the early days when you started? Who were your first customers? Not the names, but so much as how did you get them through your network, I suppose, or how were the early days?
So I was always very knowledge driven. Like, I always like, even till today, I'm very open about telling people what is right, and what they should do, and that is how I used to get a lot of inquiries. Like, and what happened was that I got initially, one of the VC guys was my senior from my college, so he put me as a judge on one of the events he was sponsoring in Delhi University College, and that got splashed on social media. And because it was from a VC fund, so everybody was very interested, and that is how Venture Capital TV was based in Singapore. La Token was the founder. So La Token's guys, they started approaching me that can you do our panel discussions on different sectors, and I ended up doing 51 shows for them. like on all the sectors,
Oh,
and there
wow.
used to be people coming from all the countries, and
So this is
how.
something like a Shark Tank kind of thing,
Yeah,
almost.
it was they used to have 4 to 5 shows every day on different sectors, and they used to have panel discussions, panelists from all over the world. And we had to just log online and be a part of the discussion, and they had a very nice team who was executing it, and all those. So I was doing all these things, so I used to get a lot of business. I used to get so
Oh,
many companies approaching me.
right, right. No, that's yeah, that's the way to do it. That's partly why I'm doing this YouTube channel in the first place. Is just kind of building my brand
It
and
does help.
yeah, yeah.
Yeah.
Yeah, wow. So that's amazing. So you work with 1,700 investors and 400 plus startups. So I guess that's how all these came to you through all of that.
Yeah, so Loyal VC is a fund based in Canada, and they are an index fund in a sense that they have certain thesis around how they will put money, and they are pretty straightforward. Like, you have to be an alumni of INSEAD France or INSEAD Singapore, and you have to have reached a stage of a minimum revenue, and then they say, okay, take our check. And because they involved us in the decision making, so I got a chance to understand really early stage startups, in mature markets, and they made me a venture partner in some time. Initially, I was working as an advisor with them. Similarly, there is a US based fund, mostly NRIs are there, and they invest between 2 to 3 million in each company. And a more mature kind of fund, and all the general partners of the fund, had got, they recently also got very handsome exit. So they had a lot of money. So again, I was working very closely with them, and they made me a venture partner. So that is how, because I was always aligned with good VC funds. Not only these funds, there were so many companies. Like, one of the companies was a solar company, and they wanted to come out with an IPO, and they needed some good people on the board of directors. So they said that, sir, we want you on the board of directors. And so I joined them before the IPO, and the IPO was only 31 crore IPO, very small, SME sized IPO. And after, when they came out with the IPO, they got IPO bids of 16,600 crore. And these guys went mad, like, on 31 crore, 16,600 crore. So that is how, like, because I never promised wrong things. I never did wrong marketing. In all my podcasts, I never gave a wrong advice. Even in practical side, even if somebody was not my client or my interest was not there, I never misled people. So that is why I think I built a fair franchise in Consultancy Ventures, which people trust a lot, and clearly the proof of doing the right thing was visible when on 31 crore they got a bids of 16,600 crore. And
Wow, yeah.
that's how the journey has been.
Nice, wonderful. So, you talked about this and how this company, IPO'd and got a very nice IPO number. I'd like to talk to you about the whole thing from a founder's perspective and a startup founder journey. So, what have you seen in all the startups? You've seen the most common mistake that the founder makes, let's say.
The biggest mistake the founder makes is to see the fundraise as a one time big achievement.
Okay.
So, fundraise is an ongoing activity. The money you raise will go away. It will go away in the business.
Right.
So it's not a number to get excited. They get excited because there is a valuation benchmark which gets created, and it signifies that the company's value has reached that. So it gives them a big kick in seeing that number, that our company is now 50 crores, 100 crores. But unlike a traditional company, that particular number in a startup sense is really mythical because it is not easily monetizable. Like,
Right.
you raise a small amount and then end of the day you are parting away with your company shares also.
Yes.
So
Yes. Yeah.
and everything is like a pack of cards. Like,
Right.
end of the day the business has to perform,
Right.
business has to fire on all cylinders and keep performing.
I was asking also more in the earlier stage. I mean, this is a little bit on the later stage that they have reached 100 crore valuation. How about right almost at the beginning, the founder is just about he's made a prototype. He's kind of starting to get towards initial launch and marketing to initial users. At that point, those startups, those cases, what have you seen the mistake?
Vivek, if you look at what Steve Jobs said, it holds so true. Like, for early stage startups, that you might, as a technology person, you might have created the best in your mind, but end of the day, if the user doesn't start adopting it and doesn't
Right.
pay for it, it doesn't go anywhere. So the product has to really demonstrate stickiness, as in people using it repeatedly. It has to demonstrate lifetime value, which is multiples of the customer acquisition cost. The LTV to CAC has to be 3, 4, 5 times minimum. And the product has to have enough safety features, which we call moats, so that nobody else can, like any company with deep pockets can one day think, I'll put 100 millions to make this product, and they will kill the competition. So it has to have sufficient moats why any large company will think twice before putting money to create a similar product, but they would rather buy you out for millions than thinking of going the organic. And when it comes to early stage matters, then founders, they also sometimes they are very early in thinking of raising money. So excuse me. So the best time to raise money is at an early stage, is after your product market fit has been established. In simple words, you have already, maybe like you were planning to come up with 50 features. Out of that, you have created a product which has 10 features. Those 10 features have been demonstrated to the investor, and you have also found a way to monetize those 10 features. You have, whether you are doing it online or you are doing it through distributors or you are doing it through your own retail outlets, or whichever be the nature of the product, the initial customer should be noted as paying for it. They are wanting to pay for it, and you should have sufficient primary and secondary research. One is a research which is done by a Google form, which is online, which is primary. One is a secondary research which you do in the market. You find out people and then you talk to them and get them to fill a form, and understanding that from a customer point of view, where does your product stand? In terms of technology startups, as I explained earlier, the situation is pretty difficult for Indian founders because you are constantly competing with English language based, US based, and foreign products.
Right.
Although they have an advantage also, that when it comes to monetizing these products, the foreign companies like HubSpot and others, they typically tend to have a higher pricing which they want to charge per month. And when you convert dollars to rupee,
Right.
then it becomes quite a big amount. So that is the advantage which Indian founders have on the pricing front. So these are the. Then there are some mistakes like how they approach the investors. So see, the investor gets 20 deals per day minimum, and out of that, 3 to 4 deals are coming to him in the proper shape and format with all the information properly given to him, and he will put his team on the job. The team has to prepare an investment note and then present to him, and then he decides. So this is the typical way how it works. Now whatever team he has, they are from IMS, ISB, Harvard, so they have never run companies before typically, although they take some entrepreneurs also. So they tend to evaluate all the deals in an academic fashion. So all they will check all the ratios on the financial model. They will check market size, TAM, SAM, SOM, and so they will run it in a way of checking compliance. So that is their mindset.
Right.
There the founder also makes a mistake, and strategy wise I would say that the technology which he's choosing, if he's not a tech guy, then he has to have a CTO, because you can create a platform with the wrong technology and later on repent that why did I use this technology.
Absolutely. Yes. Could you speak about angel investors and what they look for and how a founder should approach them? What are the mistakes founders make with angels?
So there is no standard definition of an angel investor, because I know so many people who want to put money in startups. Somebody is a housewife, somebody is a wife of an industrialist, somebody is an industrialist who's running a steel company, somebody is a trader who runs 100 crore trading company and now wants to put money in startups. Somebody is a guy who's working in a bank in Singapore. He has access to dollars because, say, in terms of dollars, he's pretty rich. In terms of rupees, he's pretty rich. And so, he believes in putting money in fintech companies. So there is no standard definition. So, the things are so unorganized that one investor can give you a $2 million valuation for the same company. The other investor will give you $100,000 valuation. So it really depends on you being sure of your own value, and then not make it really see, angel means small money, so don't make it really all the valuation you can't capture in the initial stages. So you have to be really prudent about it. You have to have a sense of why you are asking for this much money.
Well, that's the challenging thing. For example, that's where I'm at. I'll use my own example, and where I'm at right now is I don't really have any numbers to show per se. I'm only just launched very recently, and just the initial user acquisition is going on. There's no monetization as of now. We'll bring in monetization. There's many possible monetization paths, so that's not a big issue. But the problem is, if I'm looking for angel investment right now, but I'm just not sure what I can say to them, or what numbers I can show them. Obviously I can come up with my burn rate numbers. Those obviously I can come very accurate because I know what they are, but I have no idea what will happen. I can come up with some estimates, but they are they are estimates by definition. So I don't know how valuable that is to them. So I'm in a bit of a quandary here, where I'm trying to understand what I can do so that I'm attractive to an angel, because what I really need is, to put it simply, what I need is someone who won't so much see that, but who sees the vision, who sees the possible outcome that this could eventually reach, and is willing to take the journey with, as opposed to
So my personal suggestion, informed suggestion to you would be that the way you have narrated what you are looking for, you find that kind of person only. Because if you take a typical Indian SME founder, they will not understand the real potential of what you are creating. Like, you are creating a way to you are creating a product which is on the intersection of social media, discoverability, and maps. So it fits in pretty neatly with any kind of product which the Mag 7, the Meta and Google, and they might want to launch. But so, they might want to buy as well in the future.
Exactly.
So,
yes. Particularly Google, because
please.
No. All I was saying, just one very quick thing. This thing would be the ideal addition to Google, because then they'd have a full house. This is the one thing they're lacking, and with this, that's it. They cover everything, because right now they don't cover individuals on the map, but now they would. Anyway, please go ahead.
So I think like a professional from Bangalore, Pune, Bombay, Gurgaon, Noida is more likely to put money in your startup, but they will be pretty worried also, because if they understand technology, they will know that this thing will require a huge amount of money to keep going. So they will be really kind of worried about whether you will be able to get VC money in the future in huge dollops. So that the concern will be there with all of them. And when it comes to believing in the scalability and adaptability of technology, then the best angels you will find from these places. And my suggestion is, definitely, especially from Israel, from Silicon Valley, from US. you will find. And even you'll be surprised, like you might find a lot of these people in Dubai because
Yes.
the government really supports technology startups there.
Yes. Not just even my startup, a lot of viewers might just be in the initial stage of startups. So my question is also like, how does one approach the angel? See, I hope you're enjoying the podcast. Before we continue, I want to take a quick moment to tell you about something I'm really excited about: my startup app, Finity. Are you tired of scrolling endlessly and still feeling disconnected? That's why I created Finity. It's not just another social app, it's your connection engine. With Finity, you can instantly discover events, hangouts, and people around you who actually share your vibe. Post about what you love. Be seen by people who get it and turn online into offline. Finity isn't just social, it's real, it's local, it's you. Download Finity today and live your vibe. VCs is more like you said, the whole compliance style. You make sure all your documents and such are so that they are the compliance is checked and they are happy with it. But in the case of Angel, it's a little more subjective, right? So what would I? How would I present what I'm doing, or anyone else doing? How would they present their startup to an angel that so that it kind of gets the angel interested and excited?
See, you just check on the internet, or I can also send it to you. There are very active angel networks in India. So there is FARD network, there is Inflection Point Ventures, Venture Catalyst. Indian Angel Network, although now they have a VC fund also. So Mumbai Angels was there. Now they have morphed into a VC fund. So these angel networks, what they do is they do a due diligence. So they will pay some agency 2 to 3 lakh rupees, and they will formally check everything in your company. And
Okay.
just like a VC.
Okay. Okay.
Once they do that, then they will take a decision whether they would like your deal to be showcased to their angel network. If they decide to pick you, they will freeze the valuation. That okay, we are putting 3 crore rupees at this valuation in your company. And once they decide, they will get an agreement signed between you and them, in which they will invite you to pitch on a Saturday evening online in front of their angel, and all your data will be created in a data room on the Google Drive, and the access to that data will be provided to all their angels who are in their network. And then a message will go that on Saturday 5 p.m. Vivek will be pitching with this startup. All the data, including the pitch deck, the financial model, and the data has been put in, in the website, and the link has been emailed to them. Then the agreement which they will sign with you is that they will charge 5% of whatever you are raising through them, and out of 5%, 2% amount they will reinvest in your company in the same round, in the same valuation. So they will tell their angels that, listen, we are also putting 2% or 5% in this, so our skin is also in the game.
Okay.
So angels love that.
Okay. Okay.
So pitching will happen for half an hour, 40 minutes, then 20 minutes question and answers. Then after 1 hour, they will tell the angels that whatever extra questions they have, they can send the questions to the network, and they will get the answers from the founder by next week. Then on Monday, they will start calling the angels who had attended that online pitching, and tell them to put bids. And depending on which network, they have a minimum bid size. So like some has 1 lakh minimum, somebody has 2 lakh minimum, somebody has 5 lakh minimum. But you will be surprised, it is so effective that I personally know that Venture Catalyst and Inflection Point Ventures, they have put money in more than 500 startups through their angel net.
Okay.
So this is how it works.
How does it work? Is it similar in, say, the USA or Dubai or Singapore angel networks over there? Do they operate in more or less the same way as what you...
The US ones, they charge more. Like they charge between 6 to 10%.
Okay.
The Indian ones charge 5%.
Okay,
And
but the process is more or less the same.
yeah, it is the same. Yeah, you can also look at Angel List and the websites which are there. So
Right.
you can there are many websites like Angel List where you can create a profile and open the bidding to the angels available on the platform, and they will invest from there.
Okay.
My advice to you is that nothing works purely online. Like you should personally know them, that who
Yeah.
are the people driving it at Angel List.
Oh, referrals are always better. That's for
Yeah,
sure.
yeah, and warm ref. Like
Yes.
the person referring you has to have a good name with the founders of these platforms.
Okay. Yeah. Well,
It's a
good.
journey. It's
Yeah.
pretty not easy. Like
Right.
you'll be like fundraising is like a full time job. Like it is just as difficult as running a business,
Absolutely.
and
Yes.
you have to have a dedicated founder for it, or a CXO for it,
Or
or
a...
a Spock for it.
Right, or some consultant like you, for example.
Yeah, consultant can do, but consultant is again, he's faces a lot of limitations because he has to deal with so many companies.
Right.
So yeah.
But do you do that for certain companies? Do you take that
Yeah,
role?
I do that, but not with the angel level investment. I do it more on the VC and family office and private equity side.
Got it, man.
Because in small tickets, how much do you earn? Like how much resources can you really put in?
Right.
Like 5% you charge for 3 crores, it is 15 lakhs. Out of that 2%, 6 lakhs you are putting back, so you are saved with 9 lakhs. So that 9 lakhs is available to the angel network. So what I will get is probably 3 lakhs out of 9 lakhs if I am being a consultant to the start.
Okay, got it. Yeah, okay.
So on
No,
3 lakhs, how
won't the
many?
startup give you something, or that's not how it works?
Yeah, I mean, but see, I'll tell you frankly,
Yeah.
these things are best handled by the founder or his team,
Okay.
because they know their best interests.
Hmm.
So my advice is to have a proper person in the team for this. Maybe
Right,
a virtual CFO, but again, finding a good freelance virtual CFO in India
Yeah,
is also a
same
challenge.
story. Yeah. And then again, the
Same story.
limitations and all that what
Yeah.
you just described. And he won't be interested either because he's getting only 3 lakhs. So it kind of the same story.
Yeah.
But anyway, no, that was very good advice. I was unaware of a lot of that, or this thing, because I come more from the engineering tech side. So so this isn't
So
really
this is
my
a
forte.
standard. These are standard mistakes made by techies all the time.
Right. Well,
Pretty standard. Yeah.
well, not only that, but talking about mistakes, what having gone on the journey as far as I have realized, when I first got into it, right, when I first decided I was going to do a startup, I thought, look, I've got 30 years experience, US experience, Fortune 500 companies I've worked at. I may not have gone very high up the corporate ladder, but at least I got the experience. And but what I've realized is that experience does not translate to startup experience. That's corporate experience and startup experience are two completely different things. And so I ended up making mistakes because I just didn't know. I didn't have that experience. That to know that, hey, this is a mistake. Don't do this. Do it this way. Whatever. So
Welcome to the party. I lost more than 1 crores when I started a startup after my corporate stint.
Yeah, I've lost quite a decent amount myself. Not that much, but it's not even the money loss also, but just sort of this.
It just puts you back, right? I mean, it just kind of gives you a setback, right? Like I faced a setback.
No,
I don't
the
know.
setback though, hey, that's there, but it's also that what I was saying, na, ki I thought, hey, I know a lot, right? Which I do, but unfortunately,
corporate life makes you feel that. Yeah.
No, and you do know that, but that what is useful for, I go to another company and work there. That's where my 30 years experience will really come into play. But doing the startup, that 30 years didn't come into play as much.
But do you also feel that, I feel that in India, failure is looked at is in a really bad way. Like it's frowned upon. Like my family will never say, okay, no matter you failed. They will say, why did you fail, right?
Yeah, yeah, of course. That is it's definitely your culture is very
Risk
failure.
agnostic.
Yeah,
Yeah.
and not only that, I think startup ecosystem is lacking severely. I mean, yes, the government under Prime Minister Modi did do all this, but for example, because of the problems I faced, there were delays, right? So
Mm.
even though I formed my DPIIT, government recognized startup, but then 2 years passed, and
Oh,
so because of that, a lot of the grants, fundings, whatever, I just don't qualify for anymore.
oh.
So it's. I think the thing there, the government thing needs to be a little better
Did
thought out.
you also count how much salary loss you have done? Like one of my friends, he's doing a trading business since 6 years, and last job was a 1 crore salary in Dubai.
Right.
So he told me recently, Tushar, I have lost 6 crores. So I
Right.
told him, you can't really quantify it.
Well, he's talking about the opportunity cost, right? So,
Yeah, yeah.
but I mean, yeah, no, yeah, I mean, that's there for sure. Although, if I was working in the US after taxes and living expenses, I don't know how much I would have saved. So, I don't think, in my case, the opportunity cost isn't that much. If I'd been working at some place where I think what he's doing is not counting in the cost of living, taxes, etc., etc. I
Yeah.
guess in Dubai,
Yeah,
you
he's
don't
not.
pay that much tax, but
Yeah, but the cost of living is very high
right.
in
So
Dubai.
then once you factor all that in, maybe he didn't
Yeah,
lose that much after
yeah,
all. But
yeah.
but
It's very high.
no, but what I was saying, we were talking about the this thing now. The you don't the ecosystem is not there in India. I feel as much. So not only is the
The
culture of
ecosystem is like that, like we Indians, we are, full of skills, low in confidence, and we need a certificate for everything. So if you were today an IIT and coming out of the incubator of IIT Delhi or IIT Mumbai,
right.
you will find the angels, latching onto you like honeybees.
Okay.
So it is very skewed. Like, some people have all the investors and the other ones are just fishing.
Right.
It is like that.
Well, it is what it is, right? But so, that brings us to interesting topic we could discuss for a little bit, which is what's, lacking in the startup ecosystem in India. What would you, like, let's say you were PM Modi, what would you change? Or Sanjeev Sanyal, you were, what would you do?
I will not want the government to be the lead in whatever funding which is happening. So there has been a lot of confusion in angel tax, and every budget this thing comes up, and people are so scared. Like, if on angel investment you are not charged a capital gains tax, but you are charged on your income also, like from an income perspective, then the tax is in like huge.
Right.
So, all these things, they scare away investors. End of the day, the investor compares his investment with regular real estate and stock market investment.
Right.
If it is treated any differently, it's a red flag. Secondly, I will probably give more benefits to the products which are being created in vernacular language. So I will want the local language markets to also become hot, and because I think that the ownership in those kind of startups will be of the local people more. So they will be better and deep ecosystem which will get created locally. So, like, Share Chat, it has 200 million subscribers, and it has a huge market in vernacular languages. So that kind of a thing really, it excites me in terms of deepening our own markets. And
Well,
some
I'm sorry, isn't that a double-edged sword? Because the vernacular market will obviously open up many more end users than, say, the English-only market. But it could be, it's probably that they have less spending power, right? The English market probably has higher spending power. So you may get users, but they aren't spending as much. So you may not earn as much. I mean, I'm oversimplifying those scenes.
somebody has to break the cycle, right? I mean, in China, the most of the spending power and most of the products sell in Mandarin, and that is because the whole system is skewed towards like everybody will work in their own language, create products in their own language, invest in their own language,
No, but
and
no, but in China, it's not as much this thing in the sense that even the rich Chinese, they speak Mandarin and English. A poor Chinese will speak maybe only Mandarin or maybe a little bit of English. But here, what the skew is very much that way, that the English speaking population is by far much more spending power, where that spending power skew I think is much less than China. I met a lot of Chinese during my time in the US and my work experiences there, so I talked to them a lot about just their China and the social conditions there and whatnot. And no, I mean, but I mean, I'm just throwing that out there just as a thought. The vernacular market may not be that profitable. That was my only.
Yeah, but see, my sense is that I'll tell you, like I was directly reporting to my CFO, who was a Russian. Sergei Savchenko, when I was in a Russian telecom company in India. So he used to tell me, Tushar, when we came here, everybody used to say Indians speak English. And then he told me, Tushar, this is not.
Yeah.
Because he used to deal with so many people who had no idea about English. Like he used to deal with his driver, he used to deal with workers at his house, and then many of the people, even the employees, their English was not really good. Many of the early stage, the lower designation employees. And so he was saying it is not true, and he faced a lot of problem. And so that is maybe out of 1.4 billion people, I think approximately 300 million speak English, which is like almost less than 25%.
Right.
So my sense is that if you can talk about inclusion in terms of providing 5 kg wheat to 80 crore Indians, if you can provide a rural guarantee scheme, why not upskill them and bring them to the level of being able to use these technologies on the back of a smartphone and create a market in those technologies which is vernacular oriented. So as a minister, my focus area would be that.
I was just, I wasn't remembering the name. I had podcasted with someone in the world of investing. His name is Mohit Sureka. I think I'll send you his contact info.
Sure.
I think you two can have a lot of synergies. And he was in the podcast, he basically said, I don't remember exactly what, but he said, okay, India's population is so huge, but essentially you're chasing that certain amount of 100 lakh users or whatever.
Same people. Yeah, 100. Yeah, end of the day, every startup is chasing those 10 crore people, 5 to 10 crore.
Yeah, so that's what I meant to say. Okay, fine, you made something that was in the vernacular language, but how much is that going to increase your profit margin? But anyway, that's just yet another thing that needs to change in India. The income disparity and all of that.
Yeah. So that brings me to the view that a lot of these founders, they chase vanity problems, like problems which are good for the ego, like creating a superior beauty product. So here in India, we have even problems with availability of water.
Right.
So that's where the money has to be channeled in solving fundamental real life problems, and the problems are endless. So to that extent, I feel that you have to be really sure of what you are wanting to solve.
Absolutely, yeah. And that's again, I can corroborate with that with my own thing where I did do a lot of homework. I came up with the idea. I even hired a company similar to what you were suggesting previously, and they did the analysis, they did a valuation. So I didn't even get any coding started. Apart from a very simple prototype type of thing, until I got the green signal from them. They did the market analysis, whatever, they did all of that, and they said, okay, yeah, this thing has potential, you should go ahead with it. They gave the green light, then I did it.
Personally, I like what you're creating, but my only thing is that nobody else should create it with deep pocket, and so that is a problem.
And that's the other thing with the deep pockets. Let's take Google, maybe not, but even Facebook. Let's say for them to do this is. Okay, they've got the money, they've got the resources, but do they really want to do this? Because it's a significant departure from their brand, you could say.
You mean
almost.
Privacy issues, right?
Not even privacy, just all of it. Like Facebook, when you think of Facebook, you think of something. Now, all of a sudden, you're throwing maps in there.
Oh, okay.
You know what I mean?
It doesn't fit in their genre.
Yeah, they may like the idea, but then they may be like, well, do we really want to get into this market? And is this our thing? Is this what we want Facebook to be known as? So it's all very well to say, oh yeah, they've got a lot of money and all, but the question is, will they do it? The one who would fit for them, it would be Google, because it's a
yeah.
perfect. It's just the one thing they're lacking.
I feel
Actually.
Google can buy your company out if you become.
Yeah, but I have to get big.
Yeah.
I have to get. Actually, I'm actually thinking in my trip, I might even this thing. But if I were to show this to someone at Google, someone senior at Google, I think it might just, instead of wanting to buy me out at this stage, they just may want to grow it organically, right?
So, I mean, my sense is that they will, like, they know that you will face challenges in scaling this because it requires a lot of cloud, it requires a lot of capacity. So I don't know, like, but I have seen them buying even 700, 800 companies every year.
Right.
So,
Yeah. I mean,
so
yeah. But
you have a fair chance.
what I wouldn't mind is if they bought it out at whatever price. Obviously it wouldn't be a high price, but then they hire me.
Oh, AccuHire.
Yeah,
Okay,
and then I'll be the head of this because hey, I'm the one who built it, right? So it makes sense to hire me, and then and then so that I would be totally open to that. That would be cool.
In fact, my cousin, like my father's brother's daughter, she's in the new products of Google. She works in Google. She looks after new products. She has just quit Google because she wants to take a sabbatical. So maybe I can run it past her to know that what's her view about this product.
Yeah, yeah.
Maybe your deck or something, your pitch deck.
Absolutely, and she may know someone, even though she's on a sabbatical. She'll know someone else.
She may know. Yeah.
Yeah, that'd be interesting. I'll be at Google, walking distance from Google headquarters a month from now. So,
okay, so I'll try and set something up. Sure,
but
let me send her your pitch deck. Do you have a pitch deck?
Yeah, I sent you, I think. Oh no, you were supposed to pull it out on LinkedIn.
Sure.
Remember? But I'll send it to you on WhatsApp.
Oh, I'll take it from LinkedIn.
Yeah,
Sure.
That was the plan. But anyway, no, I'll send it. That's cool. I have a video, also the product video and tutorial video and the comic.
Sure.
That's
share.
so we're getting closer to running out of time here, but one thing I wanted to ask also was, you've done a lot of podcasts, speaking, you've had millions of views on social media and YouTube and whatnot. So how can you speak about that? How did you do that? How did you grow to that much kind of a view level?
So, I've been talking about startups and startup funding, entrepreneurship. Then, I diversified into talking about how global economy impacts businesses and how it impacts the founders. And then Trump came and everything started heating up, and Ukraine-Russia war, Israel fighting in Gaza, and all those things. And they were impacting markets so much that, China's real estate went down. And so, I started talking about those things. And suddenly one day, one of my geopolitics video, it had 15 million views. So, and I was like, pretty, like 15 million, like I never imagined, like, I used to get like 50,000 views, and then having 1.5 crore views was, and then I did.
But I mean, why, what do you think was the factor that attributed to those views? Just
so I talked about, again, I didn't change my style, which is talking the truth. So, I just gave things bang on. Like, I said, this is the mistakes in India did. This is the mistake Trump is doing. This is the mistake this is doing. And India is being short charged. And, Modi is doing this thing right. And, in the comments, I got banged praising Modi. Like people writing.
Hello. So sorry about that. So sorry. Something happened with the reception at my end. I had to
Sure.
Were turn my phone
save
into
the
a hotspot.
file? Save the recording?
No, the recording's still going on, so that's nothing new.
Okay.
So,
Sure.
I think you're talking about the
The geopolitics. Yeah. So
the thing where you got 1.5 million views, and you were talking about Modi, and then the people were.
So I was saying that, it is so surprising. I quoted economy numbers. I quoted the facts and figures from verified government websites, verified private websites, and I praised Modi for many things, like for increase in exports, for ease of business, for so many things, for investing in roads, power, ports, electricity, and in the comments, some people are so obnoxious. Yeah, I don't
Oh.
know what they start
Oh,
writing. Yeah,
that's the nature of the thing, because there'll be Modi lovers, there'll be Modi haters, so you just got to kind of ignore those
yeah.
guys.
But
Uh,
15 million views. Then I repeated the performance. So, and it brought me to a point. Actually, when I had left my job in 2013, I had started a blog,
okay.
and that blog was called Indus Churning, and I got 2.6 million views in 59 articles I had written on that blog.
Wow, that's amazing.
So people want to, if I speak the truth here, so I get banned for that, but I feel that there is no escaping from speaking the truth.
Wonderful, wonderful. Yeah, that's great. I myself wrote a blog. It was more a technical blog, so I didn't get very
Sure.
many views on that.
Sure.
But that
Sure.
was quite a while back, too. 20
Okay.
years ago.
Okay.
Back
I've
when.
heard. Have you heard of Tech Whisperer and Tech Thirsty?
Not really.
Okay, these are, I think, these are technology blogs. So maybe you should contribute there. Some.
Let's see. Right now, I'm just this thing. I work 16-hour days every day,
Oh
including Sundays
God,
and
really?
holidays. Yeah, Sundays
Wow,
and
wow.
holidays.
Yeah.
Christmas, New Year's, Diwali, 16 hours.
My God,
Yeah.
you never thought about like going back and doing a job in the US, and along with that doing this also.
At this point, the state of the startup is such that I have to put in the 16 hours and this thing. But at some later point, actually, I am fast approaching that point where I could do something. So we'll look at that. One thing I'd like to ask you. I think we are running out of time pretty much. And this is particularly close to my situation, my heart, right at the ideation stage. Like, let's say a founder, a potential founder, let's call him, he's decided, okay, I'm going to do something. I've had enough of this corporate world. And he has a certain expertise. He has a certain idea also. What should he do? What would you advise that person to do so that he has a better chance of success down the road?
So you should research a lot. Like all the successful startup founders, even those who become investors after taking exits, they read a lot. You read a lot, and once you start reading the right nonfiction, the right thing, you start to understand that the journey which you are trying to take from here to here, that journey has been taken by hundreds of people with great communication skills. So, and there is a method to the madness. Like generally, we tend to take a lead from the US guys, like in terms of lean startup methodology, in terms of defining proof of concept, defining minimum viable product, defining product market fit, So, but those are the barometers by which you can judge whether what idea you have, what kind of journey it will require. And even though you might be a great technology guy, believe you me, you have to become a businessman at the end of the day. Like, you talk about Airbnb being a great and a very simple product to use, but the founders, although they understood technology, but they started understanding the business more than the technology, and what travelers want, what they are looking for, how it can be provided to them in the easiest and the fastest and the cheapest way, how to standardize, how to a system where trust can be built both ways by ratings which you provide to motels and motels provide to you, and the platform being a provider of trust and security, and having enough features so that people gravitate towards it. And like we call the network effect. The network effect is when all the stakeholders, they want to use that product, and because the other stakeholders are there, you are forced to be there. So all these things are more important. Technology is also important. The product is also important. The service you are wanting to create is also important. But how to productize it, how to commoditize it, how to democratize it, it's a journey which you have to do a lot of reading for that.
Right. But would someone who's just starting out be able to understand all of that and get all of that? I mean, sure, he can read all of that kind of material, but to apply it to his particular idea and to do it, that's quite a challenge. I think.
So I will give you the one line which I really love. Taking one step forward is more important than
Sure,
any
sure.
amount of any
Right, right.
amount of
Right.
brainstorming you can do over
Right, right,
that.
right,
So
right.
you have to take actionable steps. Like, of course, it's a risk-prone journey. You yourself, myself, we both made losses. Like, so if you are wanting the surety and the less risk, and then better be in a corporate life. Although the disclaimer is that nowadays, even the corporate journey,
Oh.
there is no guarantee.
Oh,
You go too often.
I've
Yeah.
been finding the corporate journey extremely volatile all the way back since 9/11 2001. That's
Yeah.
when America completely changed. I actually lost my job for the first time.
Oh.
Yeah, and it happened because of the company started downsizing because the stock market fell and all that.
And you know how
And
Americans work. They have transported that to the entire world. Like they
yeah,
hire and fire.
yeah.
Restructuring, and then teams lean sizing and whatnot.
Absolutely. And going back to what you had said at the beginning of this podcast, where India doesn't appreciate failing. So there's a
Yeah.
huge disconnect there, because what's happened with me is I had a very volatile time. What happened with me was ki after that, it was hard to get a full-time job. And
Oh,
what
okay.
they went into this culture of contracting. And contracting means
Ah,
once the job is over, you're out. I mean,
you're out.
by
You're out.
definition, that's what it is. So
Yeah.
so I was, if you look at my CV, it's, one thing after another, right? And I didn't like that. I didn't want that, but that's what it was,
Okay.
but then what's happening here is when people see this, they go, oh, there's something wrong with them. Like, they don't want to hire me, for example, just because I have so many job changes in my
Yeah.
CV.
Oh,
But the thing
okay.
is, it's like, that's what it was. It was a 6-month contract, so I did it, and then I had to go somewhere else. I mean,
Do they also have like in India, apart from the fact that we are very risk averse, and we don't celebrate failures, but is there also a glass ceiling when you hit the age of 45? Like in India, like after you hit 45, you are suddenly seen as a
Americans,
person
yeah.
old with huge salary, dispensable.
That's I know exactly what you're talking about. Not so much there. Americans are more sort of open-minded in all areas of life, and in this also as well. But the comparison you're making, the big difference I've seen is it's very difficult for people to advance to the high corporate level over there. Out here, it kind of almost, if you manage to hang on long enough, they'll promote you to vice president or whatever eventually. Here, over there, I'm looking at people, I went to college with, who are my seniors, who are kind of getting close to retirement age now, and they're just engineers. I mean, these are
Oh.
brilliant people who did PhDs. Okay, because I was actually at a PhD program. I ended up just doing all the PhD classwork, but then I ended up not doing the thesis and just left with my master's, because the only value of a PhD is if you're going to be a professor. If you're just going to work in industry, it's almost a disadvantage. And to prove my point, that's what these guys are, just engineers, and they were very, very smart. Because back when I was with them, they understood all the stuff, engineering stuff, better than me. So I know they're smart, and they're going to retire just the engineer level. It's or maybe some of them reached manager level.
Oh God,
That's
is
it.
is that a ceiling because of racism or what?
I'm sure that's part of it for sure, but because Americans very much, what they do is I ran into this a lot. They'd have someone, if not white, someone like quote unquote someone they trust.
Ivy League colleges.
No,
They'll take from Ivy League.
no, not necessarily even Ivy. Someone who's been at the company. So let's say XYZ company, right? This American has been with that company for a while, and they trust him or her. So then what they'll do is they'll get Indians or whatever, and they all report to this one person. Now, this person may not know anything, may not be technically, at a zero, but because the trust factor is there, he or she is one of them as opposed to us being outsiders.
Oh,
So
okay.
that happens a lot. And then there's inefficiency in that, because that person doesn't know, I'm thinking of all these instances where I knew so much more. I mean, not to brag or anything, but I was more qualified than them, but just because of that trust distrust factor, that person was the boss. So,
Kind of sounds like the Japanese system, right? Where they keep a person old enough and
right.
who's been in the system for long,
Well,
and they
yeah.
will not allow any non-Japanese to come in.
Yes.
And
Yeah. No, it's not so much. Yeah, I mean, there's a little bit of that particularly the high levels, like the vice president
what
level
have
and
these
all.
guys done? What this Satya Nadella and all to have reached the CEO position?
It's just my theory. My theory is this: these are all extremely high, tech focused companies. So
Oh.
they rise because an Indian will only. I mean, non-Indians don't like taking orders from Indians, but in this thing, the whole thing is software and tech, right? So they can rise up. I mean, it's perfectly normal for, say, an Indian to become the CTO because everyone underneath that pillar, that column, is Indian. So
Oh.
nobody's feelings are hurt, right? An Indian's taking
But
order
like
from an
I
Indian.
heard, I saw that Steve Ballmer was in Microsoft and he made a mess of the whole thing. Like, but when Satya Nadella came in, company's stock price has gone like
Right.
10 times. Like,
Well, obviously, I mean, he's a very qualified guy.
probably he set the right example, and probably that would have made others also follow. Like, take Indians in the CEO position. And
No, well, see, the entire CTO column is all Indian. So no one in that column is
okay,
offended, right? Because they're all Indian. So
okay.
they'll take orders from Satya, no problem.
Oh, it's about taking orders.
Yeah,
Okay.
yeah, partly. I mean, that's one thing I noticed very, very much that, see, a white person will not be that
So
happy taking.
this MAGA base must be trying to hinder the growth of Indians nowadays
Oh,
because
very
they
much
are
so.
singling out Indians. Actually.
Very much so, but Indians are only 1% of the population. So how much damage can 1% of the population do? But it's all politics, and Trump is kind of playing on a particular population demographic in the US that likes to blame others and instead
Oh,
of taking the blame for
the
themselves.
typical liberal leftist kind of left liberal kind of.
I mean, Vivek Ramaswamy told the truth, right? He said, we have to bring in foreigners because Americans don't study science and math. And he
Yeah.
was completely crucified for that. I mean,
Yeah,
and it's just, but that's the truth. They don't study science and math. They do majors like psychology, sociology, and
yeah,
then after that, well, who's going to do the engineering jobs? You didn't get the engineering degree. I went through hell here and got the engineering degree.
yeah. True.
You think I like science and math? I mean,
Yeah.
it's not like a fun hobby or anything for me. I did it because that's what I had to do,
Yeah.
and then now I'm qualified to do this job that you are not qualified for. But they don't think that
And
way.
now you are blaming me for taking away the jobs. But taking away from whom? Nobody existed like that to take away that job.
You aren't qualified to do it. So, but it's the whole blame culture, and Trump is very much capitalizing on the blame culture. He likes.
But this also results in violence, right? I've seen some like murders and stuff like that. Like the whistleblower from
Pretty
OpenAI.
minor, pretty minor. I mean, the legal system and police system is very, very strong there. So people are more fairly, they won't take the violent step, but there's unpleasantness, dirty looks, misbehavior, this, and then of course they won't let you rise higher. And that's what I was trying to explain. The Satya Nadella and Google ka, what's his name?
Sundar Pichai.
Sundar. These are prime. What's the most important department in either of these companies? The technical, the CTO is the main guy. So they rose up to CTO. That's no problem because it's all Indians in that whole this thing. And then then these guys had to do was like that one step from CTO to CEO,
No.
and the path from zero to CTO was,
My guess is कोई और option होगी ही नहीं. मतलब
Yeah.
they would be the only ones.
no, because it's a tech focused company. If Google was a financial focused company, then the CFO would have become CEO, and then that would have been a white guy, preferably a woman, because they love, that fits in with their woke sort of agenda.
Woke, yeah.
Which, yeah. But anyway, so we're pretty much out of time.
Thank you.
Thank you, Tushar. We could talk
Vivek.
so much longer. We probably will do
Yeah.
another session one of these days.
Sure.
And other than that, Tushar's info is going to be down in the description of the video below. So please have a look at that, and Consultancy Ventures link will be there as well. And let's also have a nice discussion about this podcast and share each other's views on this. And other than that, thanks a million, Tushar. And
Thank you, Vivek, for having me. Lovely conversation. Thank
thank you.